We're going to begin now. So this will be seminar one. We'll be talking about stocks and real estate. So like we've mentioned 2 weeks ago when we first talked about stocks, stocks are the shares of a particular company, and there's different types of stocks, and there are different stocks for different companies and industries. And a share is one of the equal parts into which a company's capital is divided, entitling the holder to a proportion of the profits.
So why do companies offer stocks? Companies offer stocks or shares of their company, also known as going public, because of many reasons. The first reason is to raise money. The second reason is to increase their reputation. And the third reason is to allow private shareholders to sell their stock. So some terminology you need to know for this would be the IPO, which is the initial public offering. This refers to when a privately owned company first offers its stock for sale to the public. And a publicly owned company is a company that offers stocks or shares of the company to people to purchase. And a privately owned company is the opposite of that. They don't offer stocks to the public. So trading in the Canadian and American market. So most Canadians and most people in North America trade in both the Canadian and American stock market. So like school, the stock market is not open 24/7. The timings are Monday to Friday, 9:30 a.m. to 4 p.m. Eastern Standard Time. And there are three main exchanges in North America. One of them is the New York Stock Exchange, the NASDAQ, which is the US USD, and then the Toronto Stock Exchange, which is Canadian. So indices. Indices consist of a hypothetical portfolio of securities representing a market. For example, S&P 500 consists of 500 most valuable US publicly traded companies. They're all condensed into sort of one single stock, which is also called an index. And and then there's the Dow.
Like the index is like a standard that a lot of people look at, because if you just look at one or two stocks, it's very hard to see it's really hard to represent a whole market. But once there's a large amount, like such as 500 stocks, 30 large stocks, it gives a standard of how the stock market is performing on that day, that time period.
Yes, thank you. And then another example would be the Dow Jones Industrial Average, which measures movement of 30 large American companies from major sectors in the economy. And then we have the NASDAQ 100. So contrary to its name, it's actually made of the 103 largest companies on the NASDAQ. And then the S&P or TSX is made up of around 700 largest Canadian companies on the Toronto Stock Exchange. It's basically the S&P 500, but Canadian. So for example, we'll be looking at a stock here. Its company name, as you can see here, is Boeing. The ticker symbol, which is the shortened version of its name that you typically see when purchasing stocks. When you see the NYSE, you know that the stock is traded in the New York Stock Exchange. And then to the right of it is the ticker symbol, which is also a short, basically acronym for the company's name. So we see the exchange, NYSE, New York Stock Exchange. And then we see the stock price, $199.62 US dollars. And then over down here, we can see the dividend yield. I think we'll go into dividends later on in following seminars, but they're basically payout percentages of the stock that is given to the shareholder. We'll go on to that later. And then our market cap is 112.69 billion US dollars, which basically means how many shares, the total amount of money that the shares will, how would I say it, like compile.
You multiply how many shares there are by the amount the stock price is. So it's the value of the company pretty much.
Yes, basically.
Okay, let's talk about real estate now. So before we used to talk about stocks, one more common, very, very common thing is real estate. because real estate is something that's very practical. It's what's covering your in your house right now. So it's just, so what is real estate? So real estate is just any permanent improvements attached to the land. So that can be in the house, so just a detached house, so or an apartment or a townhouse. There's a lot of variety in real estate. It can be residential, commercial. There's lots and lots. So the characteristics of real estate, it's something very special in comparison to stocks. Like, first of all, it's very, very durable. Your land lasts a very, very long time because, okay, let's look at the piece of land you're on. How long has that piece of land been here for? It's something that is durable, that will last long periods of time, like unless there's like an earthquake, natural disaster, but it's very durable. It's immovable. Second, you can't move your land wherever you go. Say, oh, I'm going to China, I'm going to bring my land there. Yeah, that's impossible. And also characteristics is a high startup cost because there's a high barrier of entry because of the prices, especially in places such as Vancouver, Hong Kong, China, like all these places, the starting price is really high. So then there's the higher barrier entry in comparison to stocks where you can even enter with just a few dollars. So there's typically characterized into 4 types of real estate. So first of all is residential real estate. So residential real estate is talking about new construction, resale homes. So that's like apartments, houses, townhouses, and those are like those that people live in, like, yeah, for their residence, as it says in the name. Commercial real estate is like shopping centers, hotels, office buildings, and pretty much in the name as well, it's for the commercial activity. So that can be stores and offices, like those. Industrial real estate is manufacturing buildings and property. So that's like for stuff in the industrial category. So those like factories to manufacture more products. And lastly, land. Land is just vacant land. Farms, ranches, those can be used to build houses, can be used to farm agriculture, and those it can be used to raise animals for food. So let's talk about residential real estate, because residential real estate is the most commonly used thing in a more practical world, because that's what you're going to be living in, no matter if you're going to be rent or buy. So there's mainly 3 categories of residential real estate. So okay, house. So a house is commonly detached. So what that means is you have your own land. The house is not sharing any walls with other houses. And pretty much in that is the most expensive type of real estate out of the 3, because you own the land by yourself. You have the rights to do whatever you want with that land, just as long as it's within the city regulations. So in the house, you are the owner itself is responsible for maintenance, keeping care of it, and that. So, and then a townhouse. A townhouse is owned through a strata. So what that means is in that unit, like the land is there, and if it's a freehold townhouse, you still own the land. However, you don't own all of the land because you're owning in together with your neighbors as well within a strata. So strata is like a corporation. So it's a company. It's like a company that holds this land, and you own it part of in shares of how much, in a proportion of how big your townhouse is. And since in a townhouse it's owned through a strata, you pay a strata fee to your management company to maintain your complex. So pretty much is you have to pay a few $100s a month, and in that few $100s a month, the management company will hire you. They'll take care of maintenance, take care of grass insurance, and that. And this townhouse is usually price wise is in the middle of house and apartment. And okay, lastly, apartment. So apartment is the same concept. It's owned through a strata because it's a whole building. You don't own the land itself. You don't own all of the land itself because you own one of the units out of the many in that whole building. And also you pay a strata fee for them to maintain your building and complex, because you notice how if you're living in an apartment, you don't have to take care of any of the exterior painting, whatever, washing, whatever it is. And usually this is the most economical option out of the 3. So, okay, so this is a house, it's detached, you have your own land. This is usually much more expensive. A townhouse. Townhouse is usually in a style of a row home, which that means is it's many homes connected into one building. Usually that can range from 2, 3, 4, 5, 6, 7, 8, 9, 10. These are all possibilities. And it's on piece of one, it's many of them on one piece of land. So you're sharing the land with your neighbors. And lastly, apartment. So apartment is where it's in a whole building with many, many units, and you own one of the units out of the many. So typically, if you're talking about Vancouver real estate, the average price for apartment would be around, let's say, $500,000. Townhouse, you're looking at $900,000. House, you're looking at $1.45 million. Like realistically, someone that is young and working, yeah, that's not affordable at all. Like to just take out that amount of cash, that is not very viable. So in that situation, you need to take out a mortgage. So what a mortgage is when a bank lends you money in exchange of title of property. So it's like in collateral, like the bank says, according to your income and that, they might give you a loan, let's say $500,000, but in exchange, you have to give them the title to your property. So what that means is if you do not pay your mortgage or your mortgage payments, they can sell your property, but you will still have, they can sell your property to recuperate those amount of costs. So in that mortgage, the bank does charge you interest for your loan, and then you're paying weekly, bi-weekly, or monthly for many years, up to 30 years. So let's say if you're borrowing $500,000-$600,000 each month, when you average that out, that's only around around $2,000. So that makes it much more easily and more affordable to a buyer. But this is all subject to your income and credit assessment, because the bank has to calculate if you are able to take care of that amount of debt, able to pay that amount of debt, because the bank doesn't want you not paying your payments. So let's look at this apartment. This is in downtown. So usually real estate is sold through a listing online called an MLS, a multiple listing system. It's where you have to hire an agent to put up a listing for you saying that I want to sell my home, and then people can come view it. So let's look at this one. So listing price is $678,000. It's the size here is 534 square foot. It's built in 2019. So let's say if we're gonna usually in a mortgage, the down payment they require around 20%, so you don't have to buy a mortgage insurance. So let's say this apartment down payment will be around $135,000. So that's how much you'll need to have upfront when you're buying this apartment. And saying that you're gonna borrow the rest of the money, so the rest around $530,000, $540,000 from the bank, and using the typical interest rate right now, which is 1.69% in a mortgage for 30 years, each month you're actually only paying $1,920. So when you look at that, the amount looks much smaller because it's spread out over 30 years. So it's a good option in like why people buy instead of rent, because this apartment, if you were to rent it, it's around $2,100 to $2,200. But although you still have to add some other fees on top of this, owning is the amount you're paying, large portion of it is repaying your debt onto your assets. So then the money isn't going away. But that all depends on your situation, because getting a $135,000 down payment may be difficult for some people who do not have help from their parents. So let's take a look at the property overview. So this property is in Vancouver West, which is one of the most prestigious areas in the greater Vancouver area. Community is Yaletown, so that's just by downtown. Very, very good area. So each year as a property, you have to pay a property tax to your city. So what this covers is you have to pay the city, and this money is used to operate the city, for schools, for infrastructure. So each year you have to pay $1,951 for this property. Strata fee is $284 per month. So what this goes to is it goes to a management company to maintain your building, to buy insurance for your building, to maintain the common amenities, because you notice a lot of the apartment towers do have, let's say, common swimming pools. Those aren't free, they're included in your strata fee. And yeah, a lot of the fees in relation to the tower. And lastly is the title. So then the title freehold strata, the meaning is strata means that it's owned in a corporation because there's more than one unit on the property on land. Freehold means that you own that land forever. It's not in comparison to a leasehold where you're actually only leasing the land for a set amount of period of time. So there's two types of property. One is freehold, where you an overview is freehold is you own the land. Leasehold is you're leasing the land for a long period of time. And typically freehold is more better than leasehold, but freehold is more expensive. Yep, so thank you. This concludes our seminar for today. Is there any questions? Any questions? Okay, so we got some questions here. So first question is, where can we find the recording? So this I'll send out on YouTube. I'll upload it to YouTube and send out a link by email. And if you don't receive an email, please DM us on Instagram. Second question is, where did you get your money to start? So if in stocks, if it's small amount of money, sometimes if your parents can borrow you amount, that would be good. And if it's a apartment or real estate, then usually the down payment is either you have to earn it over time or you have to loan it from your parents. And because that's the common view in the Vancouver market, because the barriers for entry is so high. Lastly, Sunny. So what stock do you have the most potential? I'm not sure about that. I wouldn't say I am the best investor because, yeah, because it's very subjective. It's due to your judgments and your beliefs. And Linus, is NK closer to a regular stock or a coin flip to lose all your money? NK is a coin flip stock. It is very, very risky and volatile due to its ups and downs. Although, once again, that is your judgment. And it seems like there's no more questions. So thank you for joining today's meeting.